sponsored by the Securities and Exchange Commission of Nigeria.
Few can tell the story of the evolution of Nigeria's capital market like Franklin Ogbemi, who has made it his life. He first bought shares in the 1970s when the market ran to the rustle of paper. In those days, investors had to leaf through piles of share certificates and check newspapers for closing prices. Today, his portfolio is worth millions, information flows more freely, and foreign investors are big players.
I took the initiative and bought a handful of shares in several companies. It was a bit cumbersome in those days because the stock brokerage system was not fully developed and not automated as it is today. But I must say, with due respect to the operators in the capital market, they have articulated their own processes, and we are getting some interesting results.
At the early stage, we had only about 3 brokerage firms that were in the market, that were buying and selling stocks on behalf of individuals and corporations and governments and all that. But today, we've got, if you look at the number of operators we have about 700 operators in the market. So the market has actually grown significantly from where it is coming from. And then in terms of variety of instruments, we have more variety of instruments now. We have equities, we have bonds, we have unit trust schemes, and with the unit trust schemes, we have different variety shades of unit trust schemes.
Capital market transactions in Nigeria date back to the colonial days. In 1946, the colonial government floated the first bond, a £300,000 5-year government stock. But an organized stock market really took shape in the late 1950s.
By the late 1950s, the central bank had already been established, and people felt that there was need to have a secondary market in securities trading. And what's the secondary market in securities trading? Obviously, a stock exchange. We didn't have stock exchange to provide the liquidity, for those instruments. And the government, obviously, was working towards developing the economy. And so, setting up the Nigerian Stock Exchange, was put in top gear.
In 1960, the Lagos Stock Exchange was formed, which is the same year Nigeria gained independence from Great Britain, on Kakawa Street, which is not far from the current stock exchange building right behind me. At the time, the Central Bank of Nigeria regulated the capital market, but the formation of the Nigerian Stock Exchange really set the tone and the stage for the growth of the capital market as the new government tried to drive indigenization of business and capitalism.
There was the thought that we should have Nigerians participate more in Nigerian businesses. And the Nigerian Enterprises Promotion Decree was established. So the issue of converting the then Lagos Stock Exchange came up. I joined the stock exchange as executive director of the Lagos Stock Exchange and CEO in 1976. Thought that we should convert Lagos Stock Exchange into the Nigerian Stock Exchange.
By the 1980s, the basic structures for the Nigerian capital market were already in place. In 1980, a new CEO was appointed for the newly created Securities and Exchange Commission, which took over the activities of the Capital Issues Commission, which was the apex regulator at the time. And the Lagos Stock Exchange eventually transformed into the Nigerian Stock Exchange with branches across the country.
The number of merchant banks grew from 6 in 1980 to 34 by 1989. In the same period, stockbroking firms increased from 10 to 63. 2 bits of legislation led to the boom in the Nigerian listings. The Nigerian Enterprises Promotion Act of 1972, which forced several companies to sell down shareholdings to Nigerian investors, and the 1988 Privatization and Commercialization Decree, which led to new listings as the government sold down shares in several companies. Listed equities grew from 8 in 1970 to 91 in 1980 and 115 by 1990. At the time, the market was dominated by local investors, but the next decade heralded the entry of foreign investors.
The returns of on the market and the equity side was very attractive to everybody, domestic and international. Unfortunately, the laws guiding investments into Nigeria excluded foreign portfolio managers. Luckily, we had the president of the Nigerian Stock Exchange as Chief Moshood Abiola, and he was very close to IBB, so he had us to talk to him to amend our laws so as to tolerate foreign portfolio investors.
By 1999, the first foreign stock was listed on the NSE, South Africa's Mnet Supersport. In 2001, a second stock exchange arrived the capital Abuja, but a slow start led to its conversion into the Abuja Securities and Commodities Exchange. The Debt Management Office reinvigorated the federal government's bonds market in 2005, and today, after several bond issues, a 20-year yield curve has been established.
In 2003, the federal government issued debt again, issued bonds again for the first time in about 15 years, since 1988. The objective was to lengthen the government's debt profile and to help them manage their obligations better. This was consolidated in 2006 by the establishment of the primary dealer system, where the DMO appointed primary dealers who created a secondary market in federal government bonds. This also went along with a regular issuance calendar, and we started off with 3-year bonds, then later 5-year, 7-year. By 2008, we're out to 20-year bonds. And you have a market now where, like in 2010, the federal government can issue 1.25 trillion in debt. Really significant sums to support the activities on the fiscal side. So it's been a real success story, and there have been difficulties along the way, but things have worked pretty well. And you find people like other countries like Ghana are looking to establish similar systems after seeing it succeed here.
The recapitalization of Nigeria's banking sector was another major attraction for foreign investors.
The recapitalization of the banking sector, by the way, was a turning point in Nigerian capital market history. Before then, frankly, people were doing like, what, $500,000 a day. We got to where we're doing $80 million, turnover on the Nigerian stock market. But what we have seen is there's been a lot of improvement in the management of the capital markets in Nigeria, whether from the NSE or from SEC. There's now more corporate governance being introduced, more transparency being introduced, and we've gone away from where we had share certificates before, where we now have electronic, statements showing your shares and all of that. So there's been significant improvement. A lot of it is driven by the investment banks and the private sector. And there's some that are driven by government regulations. From a government regulatory point of view, I think the most important initiative, which I think has assisted the capital market, is the issuance of certificate of capital importation that has been decentralized. Before now, you had to go to the central bank to get it. Now, you can get it from any bank, which makes it easy for you to inflow your funds. And if you sell your investment, it's easy for you to take out your money. The companies themselves have also upped their game, because now they realize that we have to report in a format that the international community would understand, because the international community are an integral part of our capital markets today. And which is why maybe another benefit that I see or initiative is the IFRS introduction, where they're saying all the companies listed on the capital market must report IFRS, because then we start getting ourselves into an international realm. So if you see an account of a company in London or in the US or China or Hong Kong, it's IFRS. Therefore, we then take ourselves to that level.
The appointment of Aruma Ote as the Director General of the Securities and Exchange Commission in January 2010 saw sweeping reforms aimed at restoring investors' confidence in the hope of turning Nigeria into a world-class market for long-term funds.
If we were going to have the capital markets transform or help Nigeria transform its economy and therefore transform its society, that it was extremely important that we took steps to build a world-class market. The elements of that had to be, first, market integrity, ensuring that our markets have the depth and breadth that it should have, that the accountability regime is transparent and robust enough, and that we had product offerings, a variety of product offerings.
Most observers applaud the changes of the last 16 months, but there is still some way to go.
My vision is that the Nigerian capital markets will clearly take its place, which is first that it's a gateway to Africa, Secondly, that in addition to being one that provides adequate returns for investors, whether local or international, that it's one where people feel that their assets are safe. It's one where we need to leverage the fact that there is great attention today on the investment opportunities in Nigeria.
This is today's capital market, a vibrant and dynamic exchange with investors like Osaruyi Orobosa Ogbeide. This 30-year-old investor can trade in ways Franklin Ogbemi could only dream about when he started buying shares.
Investing has become very easy now and very interesting in the last couple of years. Although we've had some losses, sustained losses, which has deterred some people. But that notwithstanding, the market has evolved rapidly, especially with the advent of technology and SMS services and online services, where people can easily place their orders online, get instant alerts, and even have access to information very quickly. So it becomes very, very easy to make and do your own investments. But there's still some gaps, because we look forward to a day where we could easily trade Ghanaian stocks or bonds or whatever and take advantage of regional integration issues, because the market here is quite shallow. And the products, if they could become more, then the market becomes deeper.
It's a far cry from share certificates and dividend warrants that Franklin knew back in the 1970s, part of the progress of Nigeria's capital market over the last 50 years. It's a journey from the rustle of paper to the click of a mouse that has yielded high hopes for the Nigerian economy.